Welcome back, friends. So in this particular video, I will address the issue of uh, the derivative products. So many of the people in the finance ministry, particularly the finance minister Nirmala Sitharaman, the SEBI chairperson, has also expressed great amount of concern over so many retail investors getting hung up on futures and options, and what the government intends to do in the next few weeks and months to be able to tackle this issue of excessive investment or trading taking place in F&O by the retail investors. So this definitely will have a great impact if some action is taken. But let us go over and understand what's going on. Firstly, I'll tell you my views. If you have watched my videos, time and again I've mentioned that it is inappropriate for a retail investor to sit the whole day in front of the television screen or in front of your terminal and just keep on trading recklessly without scientific analysis, or the analysis is mainly on technicals, which is also insufficient because we use technicals too, but only to small percentage. We use a lot of other tools to be able to guide you. Okay. The rise in derivatives volume in India has definitely been a cause of concern, and the SEBI chairperson had Madhavi Puri Butch had mentioned that the rise does not pose any systemic risk because of the robust margining system. But while derivatives trading is often scrutinized for its systemic risks, its severe social repercussions are equally concerning, or I would say disconcerting. There is ample anecdotal evidence indicating that many individuals are borrowing money to trade in options, hoping to make a quick profit. If you recollect, time and again in my videos, I've mentioned that at the most, what you should be doing, and there are many brokers who are encouraging this. I mentioned that use your money, your personal money, to be able to trade in options. Do not borrow money to trade in options. It's a very, at the most, if things don't work out, you lose your money, but don't borrow. Borrowed money to return is very painful. SEBI study has found that almost 9 out of 10 retail traders lose money on options bets. Okay, that is because it's not scientific. What we do and give you is scientific, where like today, for example, the premiums were just not moving. It was such a narrow movement. We had advised the clients that if you were to play in the market today, the premiums will not help you much. But if you sit in the morning, open the terminal, do a agarbatti puja and sit the whole day, you are not going to make money. You're going to only lose every day. If you think that you are only going to be making money, it's not. We have to select the days, the timings, and that's what we intend to do. Okay. Market veterans have pointed out that most weekly contracts serve no economic benefit, as they are used solely for speculation and not what they are actually meant for, that is hedging. Well, I think that there is a deeper malaise which needs to be understood. Why are people so much into options trading? Why have the retail investors gone so much into options? In my opinion, is that they need additional income. With the inflation rising high, if they were very much self-sufficient, they were all right with their own methods, with their own resources, then they would not have gone into all this. They are not self-sufficient. People even with businesses, with shops, they are also doing all this because they need additional sources of revenue to be able to meet their expenses. The expenses are shooting up, whichever city you may be in India, by the day, and that needs to be curbed. Also, there should be more in investment, employable opportunities, which is also getting lacking. So once that is corrected, you may start seeing this. So the root cause or the malaise is that people need more money, more purchasing power, and that's until that is taken care of. This is only a tip of the iceberg. Just by trying to increase the costs of the contracts, the taxes is not going to deter people. They will borrow more. I don't think that will serve. Anyway, so in fact, SEBI chairperson Madhavi Puri Buch had even said that the regulator would be open to taking any derivative products off the shelf if the working committee recommended the same. And she said that we are entirely data driven, and that's what needs to be done, and that's what a committee recommends, and we agree with the logic, then we'll do it. But then why introduce all these? Why so many index contracts? Why do it in the first place that now you're thinking of taking it off the shelf? Right? You have every day you see there is one type of series which is and you see the type of movement that takes place at 3 p.m. Is SEBI not aware of what's going on? I'm very, very surprised. But they should be aware of what's going on. And why bring in so many? There's a Sensex expiry, there is a Bank Nifty expiry, Nifty expiry. Then there are fintech expiry, right? So what not is there in these expiries? Different types of products. Bank Nifty expiry. You are encouraging people to get into different types of products, and now you're thinking of withdrawing them. Why bring them in the first place? Just to get the stock exchange more money, more revenues from the brokerages and all that? That's not the right way. It should have been thought much before. Okay, according to the SEBI data, the overall derivative turnover has jumped from 220 trillion rupees in fiscal year 18 to 500 trillion in fiscal year 24. Overall, the F&O segment has been witnessing growing participation from the retail investors in recent years, increasing by more than 40% from 65 lakh in financial year 23 to 96 lakh in financial year 24. That's quite a bit, isn't it? Individual investors in index options in India have jumped from 2% in financial year 18 to 41% in financial year 24. This does not augur well. It just shows that if you're using it for a hedging purpose, I can very well understand. But if you're only using it for playing the market, right, speculating, gambling, then naturally it will turn out to be speculative income. Secondly, so there are ways to do it from the taxation perspective, right? The average holding period is how much you can figure out, and then you can find out whether it's speculative or it's genuinely for hedging. But the more important thing is address the root cause. Give people more alternative sources of revenue so they can tackle the increasing expenses, reduce the rate of inflation. All these things, if once they're combined, then people will have less incentive to go into F&O and sit in front of the screens the whole day. Being one of the well-known people in the F&O field, I personally say that don't sit the whole day in front of the terminal. Do select days, select timings. That's how you'll make the most money. I myself am saying so, but I cannot go and drill in somebody's heads. Friends, it would be, I'm sure that the government will try to do in a very sensible manner, not something which is outrageous. And whatever it may be, if it gets a little more outrageous than what people think, we will talk about it later on. Then that can have a cascading effect on the investor sentiment. To get to know more, 1 week predictions in advance, you can join Premium Value. Also carries some good stock recommendations. You can WhatsApp us on 982-086-1044. Happy investing. Take care. Bye-bye.